Hello everyone, Jesse Webb, Traders Pro. Market conditions have ticked back to mildly bearish, still in a bull market. That still puts us in this neutral range, but it flips it back from a bullish to a bearish bias. So conditions are not improving, weakening slightly, at least based on yesterday. We're caught right in this middle. And that's why that signal is going back and forth from mildly bullish to mildly bearish, because momentum and breadth are stuck right here. You can see breadth is starting to tick back the other direction. So those are the two pieces of this overall combined indicator system that are just not giving us confirmation yet. So we're trending up. This new uptrend, this new bull market, that is intact for the S&P 500. But we just are not doing it with conviction. Right here, these higher highs. So that overall, this is the October lows. We're continuing that overall uptrend, and we are getting higher highs. So we're in terms of a definition of a trend, that simply is it. So we could see that this overall uptrend, if we were to break out of this range right here on S&P 500, our next stop is a pretty decent rally from there up into this range. It's the setup traditionally is looking to do that. These setups, when you have these series of higher highs and we're moving higher, retracement, watch for that breakout, typically will continue that move. That's the path of least resistance right here. But again, there's just not a lot of conviction. So the market is maybe watching and waiting for a little bit more idea, a little bit more confirmation of any kind of catalyst that's happening. We also have buy-sell ratio that is still bearish. Red on top. If you're looking for a shorter term bias, then this is the way to look for that, where you can say what direction should I be aware of or paying attention to. Right now, we just have this bearish, little bit of bearish undertone in the shorter term. So be aware of that. Another confirmation move higher or lower may give us a little bit more, again, more confirmation. We're just stuck right in this middle right here. It's been a really interesting time. Haven't seen this tight and consolidation like this for this long for quite some time on this indicator. One other thing to look for when you're looking at confirmation is to go in here to your sector ETF, go to sector ETF, and then sort it by signal. So you can see here you've got one sector, and this has got a combination of both sectors and asset classes that are in there as well. But it's a good way to be able to look to see what is the strength of all of these sectors combined. Now, currently, we only have tech that is in an uptrend. It has a buy signal. That's obviously the strongest rank because tech has been doing quite well. That's one of the leading industry sectors based on year-to-date performance, or just based on the current trend. Remember that when you go back to this sector scan, this is ranking them based on the average rank of the stocks in that group, versus these ETF scans are looking for, right here, these ETF scans are focusing on the overall, all of the stocks in that group based on percentage versus rank. So it's a little bit different scanning, and it's a quick way to look. If you've got one green and a few holds and more sells, you can obviously see just from a quick glance what the market bias is currently here as well based on the sector ETFs. It's heavily towards the sell with some holds. It's just not positively bullish at this point. So be aware of that in the analysis currently. It's just another quick indicator to say, yeah, it's, my bias needs to be relatively neutral, maybe to slightly bearish, but we are in this new bull market trend. So I want to be watching for a bounce, watching for a pullback on some of these. Let's go into the muscle stocks group. Interesting. A couple of stocks here. You have a signal, it looks like this, and then a down. This black bar, if you see these black bars, essentially what that represents is just a down day within the signal system. If you were to flip this back over to a candlestick, traditional candlestick chart, wherein ours show gray, some will show green, but in this case a gray bar is an up day. The low, it opens, it closes higher than the open. That's a positive day. That's an up day. That's a bullish day. A red bar means it opened higher. It opened here and then traded lower and closed lower than where it opened. You're going to get a red bar. If you're on the signals and it's black, then you know that you have a down day. In this case, it's a down day within the overall uptrend. So the black bars within the uptrend are just a retracement, just a down day. I can flip that back and see here these red days. So if you're seeing those and you're toggling back and forth, you can say I'm in an uptrend and I've got a pullback reversal day within an uptrend. That being said, that's what this signal is saying. It gapped higher, it traded lower. It may not be a real high quality candidate right here just because of that. And so you can simply just cruise by it, go to the next one and see if it looks a little bit better. ACLS, a little bit better looking pattern. Again, the point of what we're looking for is we want to try and avoid as much of this non-uptrend activity as possible. We want to participate in as much of this as possible. And once it starts getting yellow and red, we want to steer clear of those. So this is the beginning of that. Obviously, we never know if it's going to turn into one of these or if it's going to turn into one of these. But oftentimes these continuations, this is where they start. And they'll start in this upper corner of the chart. So you may feel like, it's already high. But if it really breaks out, then we've certainly seen those go much, much higher. That's a little bit of the methodology there on some of these setups. INTT also in that buy zone, but kind of choppy, kind of messy looking, not real smooth. WWE, a little bit cleaner pattern, meaning there's not quite as much volatility, the ups and downs. You can see how smooth these trends are moving, okay, within these overall uptrends. So this may be a better candidate to consider today just because of the smoothness of that pattern. And it has, it's got some interest. It's had a big run here from 80 to 106 and a move right here. Risk management, which is always the number one most important thing, is manage a stop loss either at the low of the new buy bar or at the low of the most recent hold signal. Okay, so even if I'm looking, depending on how tight I want to manage my risk or manage my potential loss, or the risk that I'm willing, the amount of money I'm willing to lose if I'm wrong, if the trend doesn't reverse, that should be the first part of the analysis. Is what is my risk tolerance? What is my risk management? If this doesn't work, if this trade reverses and head lower, and that happens, obviously we know that they're not all going to work, and so you're analyzing these. You absolutely have to make sure that you've got a risk profile set up. And there's two ways to do that, as I mentioned, below the low of the green bar, if it's a good confirmation bar, or below the most recent hold signal. And if that's too wide, like down here, you had your buy signal. Well, you could put a stop right here. If you wanted to have a little bit wider stop all the way down, then you just take less shares, right? Those are the two things you can control: your stop loss location and the number of shares that you buy. So those are essentially the only things you can control. So we go in, we trust the trend. That's what we're focusing on, is the trend direction. But in terms of risk management, we still have to be smart about where we're placing a location, so that if there is a quick reversal or if it's a really volatile stock, that we've made sure that we've protected ourselves through stop losses. OMAB, a nice potential breakout pattern. Transportation, which has been one of the leading sectors. If you recall, we go back to sectors here, and it's dropped back a couple of ticks here, but that has been in that top 5 for the last few weeks. Keep an eye on that one also. And there was a couple of others deeper down. Oh yeah, DHI, DR Horton Construction. This construction sector has been really moving higher, and now you're getting a breakout bar on DHI. Interesting to look at. AI, this is one that's been kind of popular just because of the name. I don't know how much they actually are involved in AI, but it's been a really volatile stock. I'd definitely be cautious of these kind of stocks where they're they're really just being talked about a lot, and you get a lot of volatility, and sometimes that's frustrating to try and take advantage of. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a great day today.